Chapters. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business scratch. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling proud with us.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup filling in for Tom O'Brien. I hope you all had a great weekend. Tom will be back starting tomorrow. Let's take a look at what we got going on. Obviously, a lot of crazy stuff happening right now, mainly surrounding the storm Helen. I don't always like talking about potential, market issues with stuff like that, particularly because things are going on. We will talk about that a little bit today, but obviously, sending a lot of thoughts over to the people affected by that. Even here in St. Petersburg, anyone who lived on the beach most likely lost their homes. That's all the way up that coast, starting roughly from our area through the Big Bend, and now, of course, North Carolina, Asheville, are completely destroyed. We could talk a little bit about that going forward, kind of the human impact, and then also what some of the economic impacts of that could be as well, giving deference to the situation. The composite currently is off about 0.25%, trading 18,075 cents. That Dow Jones Industrial still above the 42,000 level, trading at 42,128. The dollar staying pretty steady at that 100 level. We still are up in the upper range of 100. Now, had some times in the session, essentially, that you dip down to those really shallow $100 areas. But it looks like we're probably going to be trading in these bounds for quite a while, specifically given some of the things that Powell was talking about going forward with the Fed's economic policy. You have crude oil, very interesting, at 68.32. Just coming down, and we've been seeing it come down at the pumps a little bit as well. This is on the back of actually, decreasing output from America over the past few months. Obviously, there's a lot of issues going on with China. They're trying to figure out ways to kind of float their economy and stave off any kind of massive correction. This is being done through like stimulus package. They're easing barriers to home buying. So if we can see some recovery over there, you're going to see crude oil kind of go up, right? Let's look at the ES Mini right here, trading at 5,780, and that gold contract at 2,650, dipping down a little bit off from that high, total all-time high of 2,708. China, again, of course, has really been driving the purchase of this. There's some, kind of consideration as to why they're doing this. What is it, de-dollarization? Are they trying to kind of protect themselves from something that is occurring over there now? What it is essentially, or what we do know right now, is that they are buying a ton of it, and that is really floating this gold price, and they tend to hold it as well. Copper's still staying pretty strong. That copper future contract still above the 380 area, trading at 450 right now. Of course, it's been like floating around this kind of low fours, high threes for quite a while. The Russell futures off about 0.25%. Silver trading down a little bit, trading at 31.31. Let's take a look at Disney, actually, because I was happy to pull up my personal portfolio today and see that it wasn't just shooting it in the foot. As I always say, okay, macroeconomic outlook is looking a little better for them. And if you kind of look at this chart here, you can see it's probably going to try to move back towards that gap. Most likely the 107 area. You have a general consensus of about 110. We'll see what shakes out for them. Of course, you've had just really this entire year starting in April, just a complete burn down here. Now, this isn't on a ton of volume in any capacity. So, we need to get some volume at least if we're going to try to move up to test that gap. probably over the next month or something like that. And if it can, breach out on some decent volume, maybe we have a new trading range developing. So we're taking a close look at that. I'm at 95.82. What can you ask for, really? Especially if you've been a bag holder for a long time, and bag holding meaning that you're not profitable at that certain point. Now you're starting to see some people get into that. Now, one of the things that's interesting to me, and I asked myself this question too, right? I'm at a point now where I was holding Disney for a long time. It was super profitable. I took some off, but I wanted to hold it in my portfolio because it's Disney, right? And you want some stuff in your portfolio that you can keep for a long time. Obviously, will keep generating cash flow. Over this past year, and really there were some fundamental issues, with Disney, with streaming and all of that. A lot of people, were having they're increasing prices to get into the park, so on. These aren't just, day traders or whatever. Maybe they don't like it. There's something more attractive. I mean, there were some big institutional issues with it. And I'm asking myself, do I sell this thing now? I'm profitable because I don't like how it's been behaving. And I think a lot of people are thinking that same thing, right? If you get that move up to the gap, you do run a risk. I think in a lot of other stocks, maybe not the case with Disney, but you run that like, I'm out of here. I'm done. This is half a year that I'm sitting under, that's $100 mark, where a lot of people probably bought it, above 100, just because of the sheer velocity over the past few years with the stock. And so I think you run that risk with other stocks. With Disney, I think more people take the approach that I have with it, which is, they want to keep it in the portfolio because they believe on the long term it's positive. Just in the short term, it's not doing super well. You have JP Morgan off about 0.52%, Lucid off about 0.84%. All of the EV companies getting a little bit shaky today, especially with some stuff with China. Your Tesla off in a minor way, about 0.89%. Again, you're moving way higher on lesser volume, right, than you came down with. And then Rivian is getting smoked for sure. They got downgraded a little bit to overweighted, right? And so you're trading off about 3.2%. Now this is, if you guys have listened to me before, I am, a Rivian stan. This is where I start getting like, what the heck's gonna go on here, right? This stock is reacting way more negatively it's just much more sensitive to any kind of news regarding EVs than say like Lucid or Tesla. That makes me a little nervous. I'm still a big believer in R2. I think once they get that out, they can get profitable, which it seems like they're still on track to. That's good, right? They have a bunch of money they can continue to burn to get to a point where they really are profitable. That's coming through VW. And then, of course, they have that Amazon deal. Those all seem great for the company. It's just at this point, it really is a bet, right? If you believe they can get profitable at the end of this quarter, the Q1 of 2025, I would say this is a great time to get into it, right? If you're a little bit shaky on that and you think they're going to need a few more years to do it, this can be pretty perilous, right? I mean, obviously we're pre-profit here, like low negative PE. You have a market cap of 11 billion. That's getting shaved off from a market cap of like 18 billion at the top. So everything still is with them, right? No new news has come in that's necessarily bad for them. The EV market as a whole is labored with kind of issues coming from China, but if we get tariffs in, ideally that can kind of buffer us a little bit, unless the Chinese really can produce even at a profit, considering tariffs laid on. Folks, stay right there. We'll be right back with Steve Rhodes.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. This, of course, is the Tom O'Brien Show. Now, every Monday on the second segment, we are joined by Steve Rhodes. Steve Rhodes is the author of Mastering Probability. Of course, he also hosts the Trader's Edge at 11 a.m. Eastern Time every day that the market is open. Now, you look over here, this is what we got going on. You go to the TFNN.com, you go to that newsletters tab, I'll take you through it. And then right here, the top right-hand side, you have Mastering Probability newsletter by Steve Rhodes. Now, one of the things I really like to do every Monday, this is one of the positives that I really have working at TFNN, is that I get access to these premium newsletters just kind of whenever I want, right? And I love that because what I can say for Mastering Probability, at least, and just looking through the one today, it's like the Admiral's Brief, right? You have so much going on every day in the market. You're trying to figure out where you want to position yourself. Are you missing opportunities that you're just not seeing because you're getting concerned with other things? And that makes sense. We're only human, right? But even reading through Mastering Probability today, I mean, it's talking about certain patterns that have been triggered, right? And some of the major indices, things that I would have missed, right? Had I not had access to Mastering Probability. And one of the things I want to say is that if you're a first-time subscriber to any of our newsletters, but Mastering Probability in particular, we have a 30-day money-back guarantee in case it doesn't work out for you for whatever reason, but we're betting it is going to. We are joined right now by Steve Rhodes. Steve, how are you doing?
Hey, Jacob.
How was your weekend, Steve?
It's wonderful. I mean, this is a great time of the year for me. Got all the sports, right? We had a nice golf tournament, the President's Cup, which it was an interesting golf championship. First day, the U.S. took all the points. Next day, the international team took all the points. I thought it was a great tournament. And then all the great football. You know, Friday night I was watching one of the college games, or there were two college games on, 2 or 3. And it's amazing to me, Jacob, just how consistent and how far these field goal kickers are placing these balls. So I'm watching one game, and I think it was a 58-yard field goal that the guy kicked. He had 10 extra yards on it. It could have been 68 yards, which is kind of mind-boggling. And then I turned the next channel. I think this one went into overtime, whatever that game was, and it was like a 56-yard field goal. It's right. It's amazing just how far these field goal kickers are from where they're hitting the ball from. So for me, great weekend. Obviously, a little bit easier for us because we were on the eastern side of the state, and really, we basically just had your normal tropical storm wind, kind of damage.
Sure.
As you mentioned, I've got a good friend of mine, very good friend of mine. Their niece lost they're in St. Petersburg. They're on the beach. They lost their house. This is the second time in a row.
Yeah.
Now that they've lost their home. So, our house, I've been in Florida for 41 years. So I've been through 41 years worth of hurricanes. I prefer hurricanes because you can see them coming and you can prepare.
Right.
It doesn't always hit exactly where it's supposed to, but we have enough time to prepare for that or get out of Dodge and so forth. So to that extent, it's helpful. But obviously, when you get these gigantic water surges out there, nothing stops water.
Absolutely not. Yeah. No, our hearts go out to everyone affected by that for sure. So
and it's amazing up in Nashville. Over the week I really didn't see much in the way of TV other than some sports stuff, and it's incredible what's happened up in in the North Carolina area.
Absolutely.
and beyond. I've got a niece, and they live in the Atlanta area, in the Buckhead area, and they had a tree come crashing through their home, through their master bedroom. So
Unreal.
That's scary. And you've been up in Georgia. You got big trees up there.
Oh yeah. I saw even big trees down here. It was really, I'm only 28, right? But this is definitely the most intense one that I've seen in my lifetime. At least in my, as I was a person, right? I couldn't fathom anything worse than what this was. So, but crazy events coming on. So, Steve,
absolutely. I thought what we'd do today, since today is the end of the month, is just kind of get a little bit of a big picture as to what we're looking at.
Sure.
So this chart here, and I appreciate the fact that you love the Monday newsletter, just to kind of get gathered with regard to at least, what I'm looking at. And you're exactly right in that there's a lot of moving parts that impact the markets out here. But this here, right now, we've got the 8 different monthly 8 different monthly charts for the cash indices out there. So you notice you got the Dow on the left-hand side. The Dow itself will go ahead and negate a TD9 count topping pattern today. What that means, this is a pattern that formed last month. And when you take out that pattern in one single month, it tells you about a very strong upward momentum move. Now, unfortunately, we've got divergent messages out here, because all the other indices actually have tops that are in place. So the S&P is going to go ahead and complete its TD9 count top. Now, what's really important is to be watching as we get into October here, is this price trading above the high for September? And if it is, then there's a good indication that maybe, in fact, that TD9 count top is going to fail as well. So the Nasdaq's got a TD9 count top that completes this week. The Russell 2000's got a Rhodes Momentum Indicator top that's still in place. The semis have got a TD9 count top. So we've got each of the other monthly charts, Jacob, have topping signals. So we got a divergence. My focus right now today is really on the Dow. And if we take a look at the Dow negated its TD9 count top on a daily time frame last Friday. And it's got an A to B equals CD pattern to the upside. It's got a price projection of 43,079. That does not mean that that's where the Dow will stop on its rally out there. The weekly time frame chart does not have any kind of a topping pattern. Now, if there were to be a bearish reversal candle that were to form by Friday, then it would generate a Rhodes Momentum Indicator top. The Dow Jones Monthly, as we mentioned, is going to negate its TD9 count top. It has a 1-to-1 A to B equals CD price projection level of 47,399 out there. Now, the interesting thing about the monthly chart, I can show you another TD9 count topping pattern that formed back here in 2021, September of 2021. And we'll see that pattern also failed immediately. And then the market rallied for 10 months out there, 10 additional months before the actual top came in. That was a Rhodes Momentum Indicator top. What's really important about this is watching that green oscillator and change, or an oscillator and change line out there. And that's one of the tools that I teach subscribers out there. And as long as price is above a green oscillator and change line, it tells us we have a rising price oscillator above zero, and those are bullish conditions. So if we have a top, that would just say that the signal overall is neutral. If price trades below it, closes below it, that's a whole different message out there. So last Friday, it's also important, as you said, to take, there's a lot of different factors. So we could be buyers in the U.S. of an instrument, but overseas they might be sellers. So it's good to know how an instrument is trading in major currencies. And last week on Friday, the Dow made new all-time highs in terms of U.S. dollars, euros, Chinese yuan, and the Canadian loonie out there. So not all of these currencies are we making new all-time highs. That just suggests caution, but this is still an international rally. This is not just a rally that is U.S.-based. Always important to understand, we're entering the most bullish seasonal cycle period for the Dow, which is the last quarter of the year. If you look at the very bottom right-hand side, you'll see October, November, December should be higher closes out there. Here's the presidential cycle. The presidential cycle suggests that we bottom next week, October 9th. Maybe so sometime I think late next week out there, and then we continue to move higher into year end. The Dow's next horizontal trading range boundary line is up at 43,967. I see we're out of time here. So the Dow is sending signals to us, Jacob, that we should continue to move higher. It's the other U.S. indices that we've got to be paying attention to because there's no uniform message.
Fantastic. Steve, thank you for coming on. I know it was a little bit short, but we always appreciate you having you on. We'll see you tomorrow at 11 a.m.
You bet. Take care, Jacob. Have a great day.
Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. Jacob Shoup filling in for Tom O'Brien. This, of course, is the Tom O'Brien Show. Now, we were just joined by Steve Rhodes last segment. Usually, Tom has Steve and Basil on for one full segment, but we kind of had a shorter segment on the last one, and I wanted to bring Steve Rhodes back just for a little bit so we could go over all the stuff that he had planned for us. Again, really kind of a thorough newsletter here, Mastering Probability. You come over here to the newsletters tab, you go ahead and hit subscribe. All right, and we get some great deals here. $149 for 1 month, $695 for the 6 month, and $1195 for the year. That is a 33.17% discount for the yearly subscription. And again, if it's your first time subscribing, you can do this risk-free. It is a 30-day money-back guarantee. For whatever reason it doesn't work for you. But again, as I always say, I'm pretty sure that it will. Steve Rhodes, happy to have you back on.
Hey, thanks. I appreciate that, Jacob. So,
of course.
We're taking a look at this chart here, and this is the seasonal time frame chart for the Dow. If you look in the upper right-hand side, kind of mid-right-hand side, you'll see this covers 127 years worth of data. So pretty solid there, and this is showing us. So all those years were put together trying to match up the first trading day of the year for each year out there, and this gives us kind of the average seasonal cycle. So what we do know is that September is basically the worst, on average, the worst performing month of the Dow. But as we talked about, we're making new all-time highs right. In September. We're not down to any kind of lows or anything along those lines. So I just wanted to at least point that out to folks out there. And you can see that this, by the way, this red vertical line is today. And so it shows that on average, typically the Dow forms a bottom a couple of maybe like Thursday, Friday of last week. And we rally typically for the first week. And then we get a pull back into the end of October out there. And then it's a big move to the upside. So, the question is this the pattern that the Dow is forming? Because it certainly hasn't made lows out there. If we take a look at the presidential cycle and we look at September, it still is typically a poor performing month, not as poor as a normal seasonal cycle out here. But in this instance, it shows that really the Dow would not form its bottom until October the 9th. So I believe that is going to be right around the end of next week, if I'm not mistaken out there. So on the president, and you can see the check marks here. They'll show you all the years of the presidential cycle so everybody can get a gauge of where we're at here. So this is showing us that we could actually move lower into, let's say, next week. So what other things can we take a look at? Well, first, here's the horizontal trading range boundary lines for the monthly time frame for the Dow. Now, Jacob, what this tool does is it takes all of this data, and this data here I'm going back into 1995 or something like that. And what it does, it looks for opens and closes of each month. And it identifies the largest number of opens and closes, then it gives us the second largest number of open and closes, and that's what creates those horizontal trading range. This is a tool that was perfected by Bud Rolfs many decades ago, and it's a wonderful tool, especially when we're at all-time highs, because the question is, where is resistance? Now, on a monthly basis, the Dow actually has an A to B equals CD pattern that would take us up towards 47,399. But this, do you see this dash level out here? Yeah. That's kind of a midpoint in between these horizontal trading ranges. And those can act as resistance levels. Now, rising price channels in 43,325 level. Now, any move to the downside, the number that folks should be watching would be 4291. That was old resistance. That should be new support on any kind of a pullback. Obviously, we have a pullback today. If we take a look, this is the from a monthly basis. I want to first just focus on the very right-hand panel. And on a monthly basis, what we're going to have is 5 consecutive closes to the upside. Now, if we take a look at the prior 3, and those are marked with these blue squares around the number 5 out there. So the last time that we had one, we just simply had a 1 month move to the downside and then price moved higher. If we take a look at the time before that, going back into 2020, it was a 2-bar move to the downside. So the black digits are measuring consecutive moves higher, the red digits consecutive moves lower. What's really important, especially in bull markets, what people should know is typically moves to the downside find bottoms within 2 to 4 bars out there. In fact, even the 2020 monthly low was a 3-bar move to the downside. So it's really cool to watch these consecutive moves higher and lower in the marketplace. So that kind of takes us to today. Today is going to be a 1 bar to the downside. And if we take a look at since the rally, going back into, this is a daily time frame. So this goes back into the beginning of September. It looks like we've had just 2-bar rallies to the downside. So what this is suggesting is that we could see a 2 to 4 bar pullback inside of the Dow on the daily time frame before things resume to the upside. I would venture to say tomorrow might be the more likely day where we see some kind of bottom come in, but we'll have a better feel for that when we take a look at overnight action, Dow equity future contracts, and so forth. So bigger picture here, the Dow should resume higher. The question is, are we going to see a 1-month pullback, a 2-month pullback, or really just 3 or 4 days out there? I don't know the answer, but first what we'll do is we'll watch the daily time frame chart. We'll watch different profile levels on the equity future contract, and that will help us. One of the tools that I know you love that's included in the newsletter, even I also include this in the evening newsletter so that clients can do some of their own work. And I've identified, now this happens to be just the Dow's top 30 stocks out here, so just sticking with the Dow. But as you know, I do the top 10 in the Dow, the top 10 in the NASDAQ, all the index ETFs, all the sectors inside the S&P 500, and it provides all this information. So just as an example, people always, during the day when I do my show from 11 to 12, people are typically asking, hey, I'd like to add to a position. I'd like to get into a position. So what you want to do is you want to buy support. And so if we just take a look at Apple out here, Apple has a TD9 count support. So one support level is 211.97. Profile support, 224.92. Support of the oscillator and change line at 227.36. So those would be 3 different areas that somebody would be looking at to explore and taking and adding to their position out there. Now, I also provide the average 10-day true range out there. And so in the case of Apple, this tells us that over the last 10 days, its daily movement is $4.47. Now, down below, I won't go through this in detail. People can take a snapshot if it's on their screen. Sure. But this shows you how to use this data to create your own position size so you know ahead of time where the different support levels are at inside of whatever instrument. In this case here, we're talking about Apple. And so lastly, here is the today's going to be, as we mentioned, today's going to be bar number 1 to the downside. This is the Dow equity future contract. The key level of support that people should watch is 41,883. So you may not have access to the futures, but I guarantee you when you wake up tomorrow morning, you'll be able to see that. And so the key level to be watching, if anything happens to the downside, the key level of support here is 41,883 out there. So I expect us to see probably a 2-bar low that would come in tomorrow.
Fantastic. And yeah, like I was saying, folks, tomorrow at 11 a.m., if you like what you're listening to here, check out the newsletter, and then Steve Rhodes has the Trader Edge at 11 a.m. Eastern time right here on TFNN. Steve, thank you so much for coming back on and sharing that with us. Fantastic as always.
You bet, Jacob. Thank you, and have a great day.
Take care, Steve. Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. Jacob Shoup filling in for Tom O'Brien. Again, we were just joined by Steve Rhodes. That's the author of Mastering Probability and the host of The Trader's Edge. If you missed that interview or you want to watch it again, maybe to get some of the charts that he had on, wait a little bit after the end of programming today, and we will have that clip up for you on our YouTube. That's Tiger Financial News Network on YouTube. Make sure to give that video a like and a subscribe. It really helps us out immensely. Now, let's take a look right now. What I have over here on the screen is Super Micro, SMCI. And you can tell by the chart that they've been having some issues over a long term, right? They're about to do a 10-for-1 stock split, right? So at the end of the day or whatever, you'll be having about 41, 46 per share here. And that might seem to a lot of people very appealing, right? Obviously at this price level, it's just kind of out of the question for a lot of basic traders, right? You don't just want one share of something for $414. But as I've been bringing up about them consistently, they're having some issues. First, it started off with Hindenburg, obviously a very famous short selling institution. They released a report saying that they have really bad accounting practices. They're, quote, glaring accounting flags, evidence of undisclosed related party transactions, and so forth. And on Thursday, the Justice Department actually opened up a probe into Supermicro. This is all based on, now Hindenburg's full report wasn't based solely on an ex-employee's comments, but it seems like the federal probe is based on that. So it says here, the prosecutor at the U.S. Attorney's Office in San Francisco is seeking information possibly tied to a former employee who accused the company of accounting violations and who had filed a whistleblower lawsuit against Supermicro in April. So they have some issues. I think as it stands now, they still hadn't even given the 10K. Like there is some problems with this stock. This is a bar down. Every big volume move you have in the recent past over the past 2 months has been to the downside on pretty high volume. And it's a shame because, they're the ones who are providing these kind of like cooled server racks for this massive AI boom. It doesn't seem like anyone else is really necessarily coming in and offering the same kind of solution, although I think there is a chance that could happen. But if you're interested of getting into essentially the AI realm, I wouldn't jump immediately on this opportunity. I think beyond the technical outlook, right, which is just a downward moving chart, every high volume move is to the downside over the past few months. that is a really large fundamental issue, right? And so we'll see what happens with them, but I get a little bit nervous with SMCI, which is a shame because they really have, done phenomenally. I mean, watch this move up, right? I mean, you're trading in the high 200s in 2023, really not a lot of movement at all. This massive move up to the, 1,229 area, and then we're right back down. I mean, we're still trading above the 2023 level, but I think you can get some more movement to the downside with this, especially if it comes out that they really did mess up in a major way. Take a look at NVIDIA as well in this realm. They're off a little bit, trading off about 0.96% right now. So this is basically on China trade fears, right? So Bloomberg reported Friday afternoon that Beijing is urging Chinese companies to buy from chip makers within its own borders rather than NVIDIA's popular GPUs. This is amid heightened trade tensions with the US. That in and of itself can be a major issue. Now, there was some barring between trade with NVIDIA and China from the US government. NVIDIA had figured out a way to kind of get around to sell essentially older model chips. But this is still a pretty big portion of their, of their market, right? And so if that's true and China really does focus more in to Chinese chip buying, I mean, you could run into some issues with NVIDIA going forward. Another thing on this point with chips, this is like really kind of interesting to talk about, but it's what goes into the chips, right? And what just happened regarding the hurricane, right? So they use this high quality quartz, right? And this is what goes into all of these wafers. And it seems like the hurricane that is hitting North Carolina right now just shut down a mine for this high purity quartz sand, which you can use other quartz sand, right? But it's the same thing with like oil, you know what I mean? Like what component of it has, excess stuff you don't need? How much does it need to be processed? How much money does that cost? And at that point, now I don't think something like this will bring down the chip sector in any capacity, but this is some interesting stuff to try to, essentially add in when you're looking at things on a macroeconomic level. So spruce pines is what it seems probably completely flooded. Okay, the mines are offline for an indeterminate period of time. This is what's crazy, the raw annual production of high purity quartz sand, Covia, which is a subsidiary of Sibelco, is 120 to 150,000 units on this. And wow, these guys all together, they make up about 95% of high quality quartz sand. And for Covia, which is the one that produces a lot of it, they mainly get it from spruce pine. 80 to 90% of it is coming from that area. So I wonder how much this could actually affect new wafer production if this mine is offline for any extended period of time. See, these are kind of these impacts that happen, right, that you're not immediately aware of. Obviously, I spoke a little bit at some other point about an impact that we had with the storm on jobs. So people losing their jobs, companies aren't coming back to that area that were just destroyed. And I know that even from talking with business owners in that area, they're just not going to reopen entirely. So, I mean, this is some pretty heavy stuff. But that's interesting. I would recommend doing some more due diligence on your end to see what you think about a mine like that getting closed. And we know that can have impact just from kind of other areas as well. Taking a look at what Powell was speaking about today. Of course, he was at the NABE conference. I'm going to pull this over. This is from the Federal Reserve. And we can just take a look at it real quick, right? So in the words of Powell, he said, many indicators show the labor market is solid. To mention just a few, the unemployment rate is well within the range of estimates of its natural state. Layoffs are low. The labor force participation rate of individuals aged 25 to 54 is near its historic high. Prime age women's participation rate has continued to reach new all-time highs. Real wages are increasing at a solid pace, broadly in line with gains in productivity. The ratio of job openings to unemployed workers has moved down steadily, but remains just above 1. One of the things that I'm curious about with this, especially with layoffs being low, but maybe new hires not being super high either, what I get concerned about is that can you get into a realm where you have basically a no hire, no fire kind of area? I think that can be kind of bad for wage increase, and it's almost like a stagnation in some certain senses. You have people getting investigated now. I forget the company, I got to figure out the name of it, but their whole HR team was completely fired because one of the high-ranking C-suite executives added his resume to the pool, and it was insta-canceled, right? Because they're using AI to basically look through these, job reports and take what they want and what they don't want. And a lot of times they have these job openings that they're not intending on filling either, which in and of itself has implications that go far beyond what the Fed can look at in regards to designing monetary policy, right? I mean, you really affect things on a societal level at that point, psychologically. Folks, stay right there. We'll be right back for a short segment.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. Jacob Shoup filling in for Tom O'Brien. We just have a short segment here. Take a look. We had actually a comment on YouTube. As a Dell and Cisco provide server rack hardware, yes, that is absolutely true. And SMCI, we were talking about a little bit earlier, can absolutely and will lose market share to these companies. But one of the big moats that SMCI has is that efficient liquid cooling system, right? Now, Dell has some things that they're trying to work on to get there, but these guys are so ingrained right now with these larger companies and are relatively ahead of the curve regarding that, and that really is the future. Lower energy consumption in order to cool these server racks. So I think that's really their big competitive advantage right now. None of that matters if it turns out they're doing something shady on the back end that gets them sanctioned in a major way. But that is right now, how they're going to stay competitive. I do think you're right though in saying that Dell is obviously a major competitor in other ways as well. So anyways, let's move on here since we just have a short segment. Obviously Stellantis got tumbled today. NIO is up a little bit. I want to talk about, because I always do this, but I love it. We're talking a little bit about nuclear to end the day. Okay, you have Michigan nuclear plant finalized federal loan to support first reactor restart in U.S. history. This is the Palisades nuclear plant in Covert Township, Michigan. Closed a $1.5 billion loan to restart. This is going to be awesome because it can come back sooner than 3 Mile Island, coming back online potentially in 2028. It is very clear that the U.S. government is seeking to expand basically purchasing of uranium, right? U.S. is ramping up the hunt for uranium. This is honestly to end reliance, and in a way Kazakhstan, but in particular, this is going to be Russia, really, right? You have massive deposits of this stuff in Arizona. And I know they're dumping money into it. You have CCJ up right now on the news from 3 Mile Island, trading just below $48. You have VST doing pretty well as well. They, of course, got the deal for 3 Mile, trading at $118.83. Folks, thank you so much for joining me. I hope you all have a great rest of your day.